You may or may not be aware of the recent investing fiasco with GameStop. Many people jumped into the fray and lost a lot of money because they did not understand basic investing concepts. In this video, my guest and I are discussing several things around investing, like investing versus trading. We're going to talk about when to invest, how to get started, and we're also going to touch on social justice investing. Before I bring my guests into the broadcast, I just want to remind everyone that this is information and not advice. If you are wanting specific advice around investing, please speak with your personal financial advisor. So with that said, welcome or welcome back. If you are a new person here or returning, welcome to SevTalksMoney. This is a place where we talk strategies and all things money that lead to financial freedom. Now, I mentioned that I have a guest who's going to be joining me today. My guest is Diana Gisel Yáñez. She is a certified financial planner. And let me tell you how special this is. In the United States, there are about 80,000 certified financial planners. Of that number, only about 3.5% is Black or Latino. So she is in a special class. She is a money coach, a Quaker, a mediator, and a racial wealth gap activist. Her mission is to empower others to create peace with money so they can have more joy and step into their vision. And with that, Diana, welcome to SevTalksMoney, to my Sunday afternoon 4:30 p.m. stream. We are so honored that you decided to accept the invitation to join us here on Sunday afternoon.
Thanks, Sev. I'm really excited to be here. I'm excited to talk about investments, excited to talk a little bit more about GameStop. I'm sure we all have a couple more questions left.
Yes. So before we jump in, I see that we have a couple of comments here. So let me see. Stephanie's Journey is saying, hi, everyone. And Beverly Harper, hi, everyone. Hi, Diana. So thank you, Stephanie from Stephanie's Journey. And thank you, Beverly. Stephanie has a YouTube channel, so you guys can follow her. She talks about healthy things and she does unboxing of health foods. So let's jump right in to the discussion. Investing versus trading. Tell us a little bit about each of those and what the differences are.
Right. So what we've heard a lot about this week is actually trading, right? So coming in and out of the market, trying to time the right time, time the right time to buy or sell. That's what I consider trading, right? So it's a lot more volatile. Sometimes it can feel a little bit closer to gambling than actually like making a smart decision on whether to invest or not, right? It's a lot more like of a hunch of what you've heard. Investments, the way that I, as a certified financial planner, usually think of investments is doing the due diligence, finding the research, and purchasing a basket of goods. It could either be like a stock, if that's the way that you go, or a basket of stocks, and then holding it for the long run.
Yeah.
Right. So investing is very much, it's like you buy a house and you keep it, whereas trading can be a little bit like flipping. And there's much higher risk with flipping homes that there is with like owning a home.
Right. Sounds good to me. Anything else you want to add as it relates to maybe GameStop?
Right. So with GameStop, what we've seen right now is that they were shorting it, right? So they're selling the stock before they have it. And I'm sure everyone's heard the examples, but the way to look at it is like if you go to a store and you're going to buy whatever it is, you're going to buy a little speaker and it's a $10 speaker, but you short it, like you sell it without even owning the speaker. That's what it means to call shorted, right? So then you would, if you sell the speaker for $10 and then you go somewhere else and buy it for $7, you come back and that's when you make the profit, right? That's the profit for shorting. The problem that happened here is that they were selling 150% of the available stock. They're selling more than half of what stock there was without owning any of it. It's called a naked short. So when they were trying to buy the stock to like actually do good on the purchase, it was too late. So for example, going back to that speaker example, Instead of being able to find it somewhere else for $7, it's only around for $15.
So they were really lost.
They were really losing, right? And then there were a lot of other hedge funds that came in and helped to make sure that there was still liquidity to keep like moving the stock through. But as you can tell, like that's trading. Whereas investing is very much like, or the way that like that's like single stock trading. That's just GameStop. Investing is a lot more like looking at a diversified portfolio, having a diversified allocation. One of my favorite examples is, say you come into a town that has 10 businesses, and if you're a trader or if you're a stock picker, you would go and you would research each of those businesses to find out which one had the best prospects, right? That's one way of doing it. The other way is to say, I'm going to invest in all 10 of them. If some do well and some do poorly, I'll like have the average. That's diversification. Yeah. Right? So you buy into that and you hold it, and that's what I think of as investing.
Yeah. Yeah, that's what I'm not very versed in that area, but from what I've read, I would agree with you. Now, one of the things is not only about investing, but is when to invest. One other thing, what you look at, do you have an emergency fund already? Can you afford to lose this money? Give us some of the things that we need to consider to determine when is a good time to invest.
Right. So the first thing is that emergency fund, like, right, do you have the money do you have enough income or money for the next few years that if you were to have volatility, if the money that you invested goes up and down, you're still going to be okay, right? So what we recommend is that people not invest any money that they're going to need within the next 2 to 5 years. If you're planning to buy a car in next month, don't invest that money for a month, right? If you're planning to buy a house next year, keep that money in cash for your down payment. But if you're thinking retirement, if you're thinking your children's education fund and it's 10, 15 years out, those are really good funds to go ahead and invest.
Okay.
Right? And you have to look at different options. So there's a couple of different tax advantaged ways to invest. It can either be through retirement plans. If you have a high deductible health plan, you'll be able to invest through an HSA, a health savings account. And both of those give you tax advantages. Like Sev said at the beginning of the talk, this is not advice, this is education. So you have to find out with your own CPA whether this is the right move for you. But let me go a little bit into what each of those is. The health savings account gives you 3 tax advantages, right? So the first thing is that you deposit the money before tax. It goes before you receive it into your paycheck, it goes straight into the HSA account. The second advantage is that any growth in that account, if you take it out for medical expenses, it won't be taxed.
Yeah.
Right? Yeah. And the third advantage is that you have access to that money forever. Like it doesn't time out. There's some savings accounts for health that actually do end at the end of the year, but a health savings account is with you permanently.
Yeah, that's why I like the HSA over the FSA. Yeah, it is your money, and it gives you the tax break because you're not taxed on that money. So that's one way to reduce your tax burden. For those who are just coming in, we're talking about ways looking at when to invest and the things to consider. Now, for somebody who has really high interest debt, and I know what I would tell them about investing, but what would you tell someone who has really high interest debt and are thinking about investing?
So my approach to financial planning is always looking at your goals, right? What is your long-term goal? Say, for example, you have high interest debt, high interest credit card debt, and your goal is to buy a house. That's the first thing. You're a first-time home buyer in your family, something like that. You would want to pay off that debt before you start investing. Now, if you want to take $100 and go play with it, you can play with your $100 however you want, but don't play with the money for the down payment on the house.
Yeah. Right? Sounds like good advice to me. Now, we talked a little bit about, the vehicles that we can use or consider the after tax effect versus the before tax effect of investing. And we talked about the HSA But is there anything else that somebody would need to consider when it comes to investing? We talked about paying off high interest debt first, and be careful about not investing money that you can afford to lose right now. Making sure you look at those after, before tax vehicles like the HSA. And I don't think we talked about having an emergency fund. Let's talk about, the importance of having an emergency fund before we even think about investing.
Right. So again, looking back, if you're that example, right, of somebody who's got a long-term goal of having a house, they have high credit card debt. The first goal I would suggest is like paying off that credit card debt or figuring out a way to get it into consolidated to like get rid of it so that their credit score won't be affected. And then you need to start building an emergency fund. Right? Because if you own a house, there's always things that come up that need to be looked at. You own a car. If you're a person with health, who's walking around, you don't know when you're going to have an emergency, that having liquid cash available is going to make it so that you don't end up getting into debt. Right?
Yeah. And go ahead.
And so that's building the emergency fund. And you want to keep that emergency fund liquid. Right? Usually we say 3 to 6 months, a year, depending on your income and depending on what you do, if your income goes up and down all the time because you're self-employed or something, having a bigger cushion is going to make it so that you can feel more comfortable, right? It's a very personal number too, because some people have family that they can fall back on. Some people are married and their spouse is going to be able to help them out. So it's very much like what actually makes sense for you. Some of us that grew up with having money and then not having it, if you grew up in like scarcity in that kind of environment, you may actually want to have more money to actually feel safe, right? So and that emergency fund, keep it liquid, keep it cash, put it in a bank. I know that the rates are really low right now at like 0.5%, but it's more than you're going to get if you put it under your mattress.
Yeah. Yes. And when she's saying liquid, it's not invested in the stock market. It's not any of that. It has to be something that's available right now. Maybe a CD. A CD is something that you consider maybe a 14-day CD or a 30-day CD, something short that you can get access to it really, really quickly. And cash, of course, there's nothing liquider, if that's such a word, than cash. Than cash. So, also we wanted to touch a little bit on social justice investing. And we had in our email correspondence, you mentioned CDFIs and also ESG. And for those who don't know what that is, I do know that ESG, but I don't know enough about CSIs. I do know ESG is the environmental, social, and governance investing, but I don't know enough about CDFI. So can you explain what those are and how they help with social justice investing?
Of course. And so just to go over everything, right? Like once you do decide that you're ready to invest because you don't have any high interest debt, because you have an emergency fund to like cover your upcoming expenses, and you've decided where you're going to invest. And I think we forgot to go over one option. So for like where to invest, there's health savings accounts if you have access to them. There's retirement plans. There's of course after-tax accounts. So those have no tax benefit, but the money can still you can still invest through them. There's 529s if you have like education funding for later on. So once you've decided where, then can you bring in your values into it? Right? Can you invest in socially responsible investing? They can either call it SRI, they can call it ESG, environmental, social, and governance measures. And one of the options that's out there is a CDFI. I'm actually blanking on what it stands for, but a CDFI is similar to a certificate of deposit. It's similar to a CD of where the money's more liquid, the investment return is smaller, but it's very targeted on what they invest in. Say, for example, they decided to invest in a municipality in a city that is mostly Black and brown, right? In an area that's underfunded. That's a place where you can go and fund and like give back to your community that way. So there's a lot of interesting research on CDFIs, and it's a way that for if you have cash that you don't need, if you have cash beyond what your emergency fund, you're going to need the money in like a year or so, a CDFI could be a good option. And I believe it starts off like at $1,000, and there's different organizations that you can invest through.
Yeah, I definitely need to look into that because I have I want to say closely funded, a good funded emergency fund. So now I'm looking at other special initiatives to invest in and to save, different ways to save. So I definitely will be looking into that. Now we mentioned a little bit about the HSA, which of course is before tax. We touched on the 401k or 403b if you're a government employee, and that is for those who are you can put those in, you can put monies in that after tax or before tax. And of course, we said after tax investment, but talk about that because, that's IRA, but what else is there? You have the Roth IRA, I think is what you would consider after tax investment. And then there is a standard IRA, which you would put in before tax, correct?
Right. So going back to retirement plans, there's a bunch of different types. If if you have one through your employer, it could be a 401b, 401b, 457, a 401k. There's a couple of different types, right? Those are through your employer, and the limit on those is 19,500. If you're under 50, if you're over 50, they increase that by 5,500, so that's a total of 26,000.
Mm-hmm.
So through your retirement plan, if you're over 50, you can contribute 26,000 pre-tax. After tax, that would be Roth if they have that available. So then there's also individual retirement accounts, IRAs. You can have a traditional retirement account or a Roth retirement account. And the difference is the taxation. In a traditional retirement account, the money goes in there pre-tax. The money has not been taxed, so when it comes out is when they tax it, right? In a Roth account, the money is taxed when it goes in there. So when it comes out, it's not taxed.
Right.
Right. So with a pre-tax, you tax at withdrawal. With a Roth, you tax at deposit.
Yeah. And for those who are listening, what you want to consider is if you think that in retirement your tax bracket is going to be lower, then you definitely want to put in before tax money now. So if you're a high earner and you're in maybe the 25%, 22%, 24% tax bracket, and you're putting money in before tax, that's going to lower your tax bill now. And then when you get ready to retire, if you're going to be in a lower tax bracket, then you can pull that money out at a lower tax rate. So those are the kinds of things that you want to consider. And as I said, this is just educational stuff. If you want specific advice, I'm going to be sharing Diana's information later, and you can talk with her about some of the different options based on your particular situation. So let me go back to the chat, and I see a couple of comments here. Stephanie is saying that is so true. A nest egg is very important. I learned this firsthand being out of work for a year. Yes, I am. I don't want to share too much here, but I am definitely building my nest egg. That's all I'll say. And I see we had two other persons that join us in the chat. We have some other people who are they're just shy. They don't want to come in the chat. But Amsab Kitching, she has husband and wife. They have an awesome YouTube channel. If you want to learn about making different things, they just made a Valentine's Day cookie, chocolate thing that I'm going to be trying because I love coconut. And it's like 3 or 4 ingredients. So I'm definitely going to be trying that. And then, of course, Asian American Legal Focus. She has a legal channel where she shares a lot of fun things around the law. So go follow them if you guys can. Amstab Kitchen for really great recipes. Stephanie's Journey for health, helpful tips and unboxing around healthy foods, and Asian American Legal Focus for fun things around the law. So as we get ready to wrap up, I want to share also that Diana was on my podcast. I'm going to show her the information. We chatted a little bit, money across generations. We had a talk on the podcast. So for those of you who are not aware, I have a podcast, and if you want to if you want to check it out, you can go to SevTalksMoney.com, and on my website there is a tab for podcast, or you can type it in directly, SevTalksMoney.com podcast, and you can listen to the podcast directly on the website, or you can go to your favorite podcast listening platform. It's also on the website. You can click on that and go to your platform and listen to the podcast. So you don't want to miss it there, because she's sharing a lot of gems here, and she shared a lot of gems over there too. So you don't want to miss that. And I want to go ahead and share Diana's contact information. And then, Diana, in the meantime, if you think about anything else that you want to leave the listeners with while I share your contact information, and then we can talk about it afterwards. So she can be found on Instagram at all the colors 8, and it's all _the_colors_8. So you can find her that way. On Facebook, she's all the colors 8. So if you type in all the colors 8, you'll see the beautiful little butterfly with colors. And we want to talk a little bit too about what all the colors mean in terms of harmony with your money. And then, of course, in LinkedIn, she can be found on LinkedIn, with under Diana Yáñez, and our newsletter. You want to sign up for her newsletter, where she shares different things that can only help you with your retirement and other things that you're considering around money. So this will be in the replay of the video, so you can always go back here to find her contact information. So before you give us a wrap-up statement about anything else that they want to consider, talk to us about all the colors and what that means in terms of money and your mission about having harmony and peace with your money.
Right. So all the colors, that actually came from a conversation that a friend and I were having about how sometimes things are pretty dark, right? And when I talk with people about money, I want to be able to hold that the darker times that we have with money, like the debt that we've gone through, maybe the family fights over money. I want to be able to talk about that, and also talk about your vision, the things that you want to create for your kids, the places where you want to travel. I want to be able to hold with you the whole range of it, all of the colors. If you're feeling really gray around your money, I want to be there with you. You're feeling really green, you're feeling really greedy, I want to be there with you, right? So I just have a big range, and that's what it's called, all the colors. I just want people to be vibrant around it. And again, my mission is to help people create peace with money, right? Once you feel settled and secure and educated, then you can start to have more joy, right? Feel more empowered as you use your money, as you invest it, as you gift it, as you save it, and then step into your vision. We all have an idea of what we'd like our ideal life to be like, and we often hold ourselves back because of money.
Yeah.
Right? And all the while, it's also social justice is also really important to me, because yes, it's about personal responsibility, but we also have to look at the systems that we live in.
Yes. Yeah. There are so many systems that are designed to exclude people of color from moving forward in financial freedom, and we have to fight that much harder to be included in various processes. And so that's one of the reasons why I got excited when you shared about social justice investing, because I'm definitely going to be looking at that, because I have been superbly blessed, and I want to be able to use some of that to influence and create blessings for those that are less fortunate. And I have a favorite saying that I say: money is not rocket science. So let us not be afraid of money. Let us learn it just like we learn everything else. Let us attack money, and let's kill all those money beliefs, the limiting beliefs that cause us to not do what we need to do to flourish in our money. Because we have those limiting beliefs, we allow them to pull us back from really going after the things that we need. And I wish I had known all of this, years ago, but you know what? It's okay, because the experiences that I had enriching the knowledge that I now have about money. So it's never too late. For those who are listening, it's never too late for you to learn about money. It's never too late to invest. It's never too late to to set up money for retirement. It's never too late. So I don't want you to be intimidated by money. And again, let me share Diana's contact information for those of you who are interested in talking to her further about anything money related. Do you have a way for them to, well, yes, you do, a way to contact on your website. So yeah, they can go to your website and go to the contact and set up something to have a discussion, because she looks at money very different from just the traditional. And where we are today, that's how we need to look at money, because we've been told so many things around money. And so because of that, we've created stigmas. And I think really, personally, I think a lot of that came from those people who handled millions of dollars in money portfolio, and they created these things like, you have to come to me because I have all the knowledge, I have all the power. And so it created this stigma with money, so that we think the little people can't, we as the little people with a little bit of money feel like we can't have the knowledge, and we can't have the information, and we can't have what we need to progress towards financial freedom. But the world has changed, and we have people like Diana who has created the opportunity for us to be able to get to money and see money as just another tool. It is not intimidating. We making it easy, making education easy, so that we can do what we need to do to grow towards financial freedom. So with that, Diana, anything that you want to kind of wrap up and tell us about? And I am going to also include the podcast link in the description of the video. And I'm also going to be linking the video that I did on Friday night that talked around some of these things about money and the savings challenge that we have going on. So take it away, Diana.
Right. Today's discussion on investing was really just a very broad overview, right?
Yes.
And I just want people to walk away knowing that they can speak this language. One of my favorite things to do is to translate money jargon, money terms into examples that are really easy to understand. It is possible for you to feel really good around your investments. It is possible for you to know that you're doing the right thing for your family, right?
Yeah.
Like Jeff said, money is a tool, and you have what it takes to use that tool wisely.
Yeah, if you learn to drive a car, you can learn to manage money. Especially for those who learn to drive a stick shift. That's not me.
I love that. I love it.
Yeah, my one experience was enough. So again, I want to share the link for the podcast, www.SevTalksMoney.com/podcast. And also next week, my guest is going to be talking about purchasing a hotel. She actually purchased a hotel. And she is going to also talk about insurance. So you don't want to miss that. Come back next Sunday at 4:30 p.m. Eastern time right here, where we're going to be sharing about purchasing a hotel as an individual, and also, and you don't have to have millions of dollars either. And also, we're going to be talking about insurance that protects that asset, that, whether it's a hotel or whatever, we're going to be talking about that. So Diana, thank you again so much for joining us on Sev Talks Money. And let me double check the comments. And American Legal Focus is saying, thanks for this great information. Stephanie saying, I learned to drive on a manual car. I started on a stick shift, but I ended up on a manual, and I'm not brave enough to do stick shift. I live in Georgia. It's hilly. No, I'm not doing the stick shift. So again, thank you, everyone. Thanks for those who are going to be watching the replay. Please share the YouTube, the content. Share this, take the link and share it out so that people know that we're here, and let them remind them to subscribe, to comment, and to share, and to like, so that YouTube will, because the more you do that, the more you interact with the content, the more YouTube is going to push it out to other people for them to know that we're here on Sundays at 4:30 p.m. Eastern time. And if there is a topic that you would like for us to discuss on this broadcast, And if there's a guest that you'd like for me to bring onto this broadcast, please let me know that. You can share it in the comment, or you can share it, send me an email directly at Severin@SevTalksMoney.com. That's Severin, SEVERINE at SevTalksMoney.com. I would love to accommodate you, because this is not about me. This is about you guys. This is about all of us learning together, growing together, and gaining financial freedom. So with that said, thank you so much, and have a wonderful rest of the afternoon.